Hello, dividend growth stock investors. It's Colby, the DGI Crab, coming to you with an update about the portfolio. Did you realize that if you are investing along with the DGI Crab, utilizing a similar strategy as mine, then eventually you will get paid dividends every single month, regardless of which age tier you're in? Well, I did the payment schedule breakdown, and we're going to jump into that on this video here today. But remember that the expressions and opinions in this video are just the expressions and opinions of this one crab. This is just this one crab's strategy. Think it's a good one, but it is just mine, and I'm not a professional financial advisor. So you should always do your own due diligence before you invest in anything, but I would like to share my strategy with you and how you can get paid a dividend every single month utilizing this strategy. So we're all about passive income here, acquiring tax-advantaged dividend-paying stocks and ETFs that will allow you to eventually one day attain not only financial freedom, but stable financial freedom, because these dividend stocks, this group of 60 that I've selected for the channel, have an amazing history of not only not cutting the dividend, but increasing the dividend payout year after year after year. If you're new to the channel, you'll know that I took these 60 stocks, I split them out into 4 separate categories or tiers based on the age of the investor. So your tier 1 investors, which are aged 18 to 30, they're going to be more focused on lower starting yield but rapid dividend growth compounding year over year. And the tier 4, the age 54 and up, they're going to be focused more on acquiring a high starting yield with more stable but slower dividend growth over the long haul, because they need that income more immediately. So let's take a look at the actual payment schedule for each of the 4 tiers so you can see how you could get paid out every single month. So for our tier 1 investors, you're going to see here on this breakdown that most of what you invest in, if you're following DGI Crab plan just like to the letter, which again, don't invest in something because I told you to or because I'm doing it, but if you happen to be kind of following along here and you eventually obtain every stock in the tier 1 stock group, and invest as I recommend in ETFs consistently. At least half of your income going in should be going into some ETFs just to make sure you have diversification automatically. You're going to see here the March, June, September, December, or the third month of each quarter. Those are going to be where most of your money comes from. And that's sort of the plight of people that invest in ETFs really heavily, your Vanguards, your Schwabs, your BlackRock iShares. A lot of that stuff pays out on the third month of the quarter. So I have the ETFs just in red so we can a little bit more easily distinguish them from the single stocks. But there's consistently just going to be 3 stocks in this particular group that don't pay on the third month of the quarter. You're going to have automatic data processing and Nike that pay on the first month of the quarter, and Lowe's, which pays on the second month of the quarter. So your January, February, April, May, July, August, October, November, those will be lean months in terms of the amount of dividends that you receive. But if you're in this 18 to 30-year-old range, odds are you're not living off of your dividends yet. You're building up dividend compounders, as I said, that grow their dividends rapidly. So later on down the line, the stuff you acquire for a low yield now is going to snowball into massive yields for you once you've hit like your 40s and you're regularly getting a 13 to 15% annual payout collectively from this group of stocks. That's the goal for you all here. But as you go along, if you have each of the stocks in this tier, you will get paid every month. Now, does that mean you should reach and try to acquire ADP, Nike, or Lowe's just for the heck of it, just so you can get paid every month? Well, no, I don't think that's the case. Wait until the individual companies are showing a sign of undervaluation, which to me is they are at least 20 yielding now at least 20% higher than their 4-year average. That's the primary factor that I'm looking for when it comes to this group of 60 stocks. But just be patient with any of them. But you can kind of keep in mind that if you're acquiring any of these three, that it will split your payouts over the course of 12 individual months, as opposed to piling up everything in just 4. We move down into the tier 2 group, the 31 to 41-year-old investors. It's a little bit more spread out. We'll still have the majority of our dividend payers being in the third month of the quarter, and a lot of the quarterly payers do pay on the third month of the quarter. I don't have the list of like all of them, but I'm pretty sure the majority of quarterly paying stocks do pay on the third month of the quarter. I don't know exactly what that percentage is. As I said, I don't have it right in front of me, but that's just going to be the case. Still the same group of 4 ETFs of this group. I just usually invest in them in a little bit different weights from 31 to 41 as I do from 18 to 30. But we do have 3 stocks in this category that pay in the first month. So Illinois Toolworks, JP Morgan Chase, and McCormick. And then we have 5 of them that pay in the second month of the quarter: APD, Caterpillar, Fastenal, Starbucks, and Texas Instruments. So a little bit more spread out, a little bit more diversification. But if you're a tier 2 investor, you will definitely get paid all 12 months out of the year with this group of stocks. Tier 2 has the largest group of stocks, by the way, of all the 4 tiers. They've got 19 of the 60. Moving down into tier 3, this is for the 42 to 53-year-old investors, and I switch up the ETFs that I focus in on, starting at age 42, where as opposed to your S&P 500 VOO or your dividend appreciation like a VIG or a DGRO, I'm going to switch over to a little bit higher starting yield ETFs, so more focused on VYM and SCHD, which are probably the 2 most popular higher yield ETFs out there. Since you got the Schwab version, the Vanguard version, both excellent, both very different from each other in terms of their holdings and their strategies, but they're both just fantastic ETFs. And then I really like this ETF from Wisdom Tree DHS, which is a monthly paying ETF constructed kind of similarly in terms of holdings to VYM. It has a higher starting yield, not as good of a growth rate, but it does have the advantage, I suppose, of being a monthly payer. I don't get too hung up over monthly versus quarterly like some people do, but it is kind of nice as you start to get a little bit older and into your early 40s, mid 40s, to have something that you're just kind of gradually building up a position in that definitely pays all 12 months. In the 42 to 53 range, I am for my strategy, I will do 5% of my income will go into DHS every time that I invest. And I'll probably do 20% each into VYM, SCHD. Or if I wanted to pick just one or the other, I'd just do 40% into just one of them. But my overall goal at this point would be to do like 20% VYM, 20% SCHD, 5% DHS. And then that just small little 5% into DHS will give me a stable monthly payer all 12 months. But the group of stocks here, you'll see we actually have as many in this group that pay in the first month of the quarter as we do in the third month. So this group in the tier 3 really stabilizes out, and you're not going to have any particularly lean months. Your second quarter months with AbbVie, Hermel, Procter Gamble, and then DHS, of course, will be the leanest. But Not bad though. You should get a really nice payment each and every month of the year with this particular group of stocks. And then as we move into tier four, so tier four, if you've been following the channel, my ETF breakdown for tier four does get more complex. And the reason is that if you kind of invest in the way that I do up until this point, there are some things that you don't have any exposure to just yet. So, for example, at, at this point in time, you wouldn't have any kind of covered call ETFs like Devo or Jeppy, which are my two personal favorites in this category. You haven't bought any preferred shares, which is what PFFA is. It's an ETF that holds preferred shares. You haven't got any bonds, which is SPHY. This is high yield bonds. So all of this stuff pays out monthly. So we've got four ETFs here that are going to pay you every single month. Still be adding to DHS at this point for another monthly payer. And then another thing that you don't have exposure to at this point, if you invest like I do, is MLPX. Well, MLPX is an ETF that contains 27 MLPs, master limited partnerships. I don't invest in master limited partnership single stocks because they require a special K1 tax form every single year. And I just don't like to deal with that extra complication on my taxes. So I just have decided that because they're higher yielding instruments, I'm just going to wait until I'm in my mid 50s and I'll invest in a little bit every single week into MLPX and get that exposure to those stocks and not have the added tax complications. That one pays out second quarter or second month of every quarter. And then this is the smallest group of individual stocks. I only found 10 that met my criteria of being high starting yield, decent, respectable history of dividend increases, lack of dividend cuts, decent market caps, and so on. But there are the only two monthly paying single stocks out of the 50 or out of the 60 on the entire channel. There's only two monthly paying stocks on here, and I think they're far and away the two best monthly paying single stocks on the market. If you've watched all of the clickbait stuff out there, no offense to anyone else out there doing dividend content, but clickbait stuff out there regarding Realty Income and Maine as monthly paying stocks, I guess the clickbait is, hey, look at these stocks that pay monthly. If Maine and Realty Income aren't on those videos, then I'm questioning that content creator. Honestly, because these are the two best ones, that they're the only ones that to me are really worth loading up a position on. There are some other okay ones. Don't jump all over me, but I think these two stand out as far and away the best. And then we've got some real estate exposure here at this point, like NNN, Essex Properties, Aries Capital. Aries Capital does some special dividends too. So while they mainly pay out on the third month of the quarter, they sometimes pepper in some special dividends here and there on off months. I don't count on those, but it's nice when they happen. But this is the most balanced of all of them across month to month, because this is for older investors who are at the point where they're probably really hoping to be living off of dividends at this point in time. So with this collection here, with your Maine, your realty income, and all these monthly paying ETF options that I've peppered in here, every single month for the people in their mid 50s and older should pay them out quite a nice chunk of dividends. And if you're just kind of getting started at age 54 and you've got to build up that passive income as quickly as you can, all of this stuff offers really nice high starting yield and should be very stable and gradually increase moving forward. It's not high yield, but yield trap garbage like a lot of people are pushing out there. This is stuff that you should be able to sleep very well at night, knowing that if you build it up, take the time, build it up the right way, it's going to be very stable for you, and you'll get raises every year, even if you're not reinvesting your dividends. So that's how you could get paid every single month utilizing the DGI Crab strategy, regardless of what age tier you happen to fall into. And it's not about getting paid every single month, but that is a nice little perk to have a little something coming in every single month, no matter what. So we're all about acquiring passive income here, but we're not trying to do it rapidly. We're trying to do it the right way. Patience and perseverance accomplish all things, everyone. Remember that. My name's Colby, the DGI Crab. Email me your questions, DGICrab at Yahoo. See you next time.